Okay, today we're going to take a look at the Momentum project. So Momentum has been doing some restructuring of their application. You might be familiar with their process of bonding and their previous tokenomics with the mass token and things like that. A lot of those things have changed. So for this video, we're just going to focus on the new version 2 of their application. Before we get into the details of that, just a quick disclaimer, we are not financial advisors. The content on our website, social media, and these videos are for educational purposes only. So as with any type of investment, we strongly suggest you conduct your own research and seek the advice of a licensed financial advisor. Crypto and DeFi is extremely risky, as all investments tend to be. So before you invest, make sure you're aware of what you're getting into, as there is no guarantee of success. So please do proceed with caution. All right, so just a quick overview of the project. Momentum has a token called Mass, and it is a deflationary token in that it has a fixed supply, which we'll talk about a little bit later. And that supply effectively gives you a partial ownership of the rewards in this ecosystem, in essence, dividends, if you stake your tokens in a thing called Singularities. Their investments come from really previous deposits and things like that for the platform, previous taxes and whatnot. And that pool of investments are spread across a number of things. Some are in trading bots, some are in miners, which they actually have a physical mining location, which I'll talk about a little bit later, and validation nodes, and also some revenue from their other projects, namely alpha shares. So we'll dig into all that, but overall, you buy a token which has a fixed quantity. So in theory, that token should go up in value by itself as more people want to get into this platform. And then their treasury is investing in a number of projects, and the treasury rewards, so to speak, profits are sent to the token holders based on your proportional holding of those tokens. So who's running this? Well, John is their, in essence, CTO and engineer slash architect. He's the one who had designed their application and all of the code behind it. Tyler is a co-founder, which is kind of running the business side of the application. And these two individuals really are the core ones responsible. Um, they do have an active Discord community, and as I mentioned, they have a kind of previous history of projects, both separate from this one. They've used a project called, or created a project called Alpha Shares, which branched off of Alpha Nodes. They also have had V1 of the Momentum project. So these two individuals are very well versed in the overall DeFi space. They've had a number of projects, honestly, some failures and some successes. So it seems like, through their AMAs, they've learned from those things and they are committed to the community and creating a overall sustainable system. But you can definitely check out some of their previous AMAs to get a feel for these guys and what they stand for. So, what projects have they worked on previously? As I mentioned, there was a project called Alpha Nodes. It's no longer active. It was a reflection token back when those things were popular. In essence, providing initial liquidity to their overall ecosystem. And, as a lot of those reflection type projects failed, I think they just ended up not continuing it. Um, that, somewhat transformed into a project called Alpha Shares. So Alpha Shares is an NFT platform where, in essence, instead of a centralized organization like OpenSea controlling the profits of the NFTs, in essence, the NFTs are distributed back to holders. So actually, that project is still active. So let's take a look at that real quick. We can definitely do a different video on this overall. But if you look into their project here, they have up here these alpha wolves, which you can mint. And then if you have an alpha wolf, you can get a certain kind of percentage of the overall profits from the platform. Um, like I said, they have a white paper that kind of talks about all of the tokenomics, so to speak, of that project. It slows up. Mainly, there's a nice infographic down here that shows basically when they get profits from transaction fees, it gets split between a staking pool for NFT holders and another staking pool for alpha token holders, and then some of the treasury. Some of this actual profit is going to go into the Momentum project itself as well. You can see that in their white paper for Momentum, or their Gitbook. You can see that there are 20% of Alpha Shares Launchpad services. So that's the Alpha Shares project. Won't go into too much detail there because that is a separate project. Momentum V1, this recently just closed, or they're kind of tapering it out. It effectively was an algorithmic stablecoin. Um, they have a stabilization code called TMM, and in essence, what that did was, very similar to how Horde or some of the other kind of algo type stabilization worked, where if there was additional buyer or sell pressure, it would use a treasury to either increase that treasury or decrease it to fix the token into a stabilized point. The problem is they ended up having a bank run on their liquidity. So when that treasury dried up effectively, then the TMM could no longer operate, bringing the token down in value. Um, they did have a mechanism to bond the token. Bonding kind of was like a staking of sorts, where you get a certain reward for bonding your token for a certain amount of time. They are not accepting new bonds for that, but they are honoring the existing ones to kind of taper out and to finish up. Um, and that really kind of brings us to Momentum V2. I think they've learned from reflection tokens, from stable coins, from the NFT work, and they kind of have shifted just to a treasury reward based system, which taking the profits from the original three projects, they have a relatively healthy treasury. And what they're doing is they're, again, investing those into various projects, which I'll talk about in a minute. And then if you hold the mass token, you get a fractional ownership of that and get fractional rewards. They're still working out the reward structure. I think they're doing a little bit of kind of reorganization on their side, but there will be kind of milestone markers when you get your rewards based on holding that token. Um, but the interesting thing part really comes in the tokenomics. I'm not quite sure how this will work out for them, but there is 0% buy and sell tax. So I think they're kind of thinking they have enough in their treasury to sustain themselves so that they don't need to take taxes. Um, I would, somewhat caution against that and suggest that they actually do tax to continually feed the treasury. But for whatever reason, they want to have it at 0%, which, works out for the holder, assuming that their treasury continually grows through its own investments. So that's one important note. The other important note, as I mentioned, it is deflationary. So that means a fixed supply. So it is on both the Binance and the AVAX smart chains. So they have 757,000 on Binance and 73,000 on AVAX. So there will not be any more tokens beyond that. Um, and some of those things are split out. So of that supply, 577 are staked into their what they call singularities, which we'll look at in the dApp. That's effectively what gets you the rewards. And then the other, 187,000 are in their liquidity pool on PancakeSwap, and that accounts for effectively most of the tokens. Other ones could be just kind of floating out there, not staked or whatnot. People that want to speculate on the market and trade it, so to speak, when the price goes higher or lower. So it's quite interesting. Like I think as a you can kind of hit this from two different avenues. One is you can hold the mass token and then kind of play around with the buying and selling. Sell when it goes up high and buy when it goes down low and kind of participate in the market. Or you can just hold them, stake them, and then get some of the rewards from their treasury. Whichever mechanism works for you, or both, are kind of options. And so that's how their tokenomics work. Um, the investments, as I mentioned, they have about 450K, they say. in their treasury. I have not verified that because I don't have access to their wallets and insight into that. Um, and also, I think some of the treasury is kind of in operational costs. Um, but as mentioned, 20% of Alpha Shares services are being sent to the this project. Mining, so they have a mining project in Paraguay where one of their founders, John, is going to be going down there, moving there, next to the mining facility, where they can get point zero or 3 cents per kilowatt hour for power, and they're basically mining proof of work tokens. And so the unique thing about their project here is that they own all of the hardware. They have their own business running that mining operation. So you actually don't have to deal with like middleman fees and things like that. So a lot of projects will do like fractional mining with other kind of crypto projects out there, and so then they're kind of not getting as much investment or as much revenue as they can. So with momentum they are. So that's a great revenue stream there. The other is validator nodes. So that's popular for proof of stake type protocols, and so they are running those. Again, they are running their own software on, I think, hardware that runs up in the cloud. I think it's on Amazon, but you can double check AMAs on that. But effectively, they're running validator nodes out there for proof of stake. And then finally, some trading bots. So I think with the next couple of days, we're going to get some results of how the trading bots are doing. But that's another revenue stream. So between the four of these, I think they're going to have regular streams different times of the month that will actually send out rewards to the token holders. And one thing to kind of note is these rewards, by definition, can't be in the mass token because there's a fixed supply. So they're giving it in a stable token. I think it's still to be determined, all those kind of tokenomics. But in essence, you're not getting more mass token. You're actually just getting more, you know, rewards, directly. All right, so let's take a look at their dApp. Um, and like I mentioned, they are shifting from V1 of their application to V2. So some features on their app are not actually active or aren't relevant anymore. So I'll try to walk through some of those things at the moment. Um, so their price right now is 0.327 for BUSD. If you want to buy their mass token, you click buy mass and it brings you over to PancakeSwap, where you can exchange from whatever token you have to their mass token. Whenever you import a token that PancakeSwap is not aware of, it gives you a warning, so you want to kind of accept that. And if I just change this to BUSD, for example, to see the exchange, say I just do one token here, you can see it's 0.32, which kind of matches up to the dashboard there. It'll tell you your mass balance here, the total locked value of the singularities, right? So I think that's just that 582,000. Oops. Times the 0.327. That's at 190. So that's how they get that total locked value. Um, and then here is where it'll tell you the dividends. So how many dividends have been distributed? None so far because I just started this up. Or I've just started mine in this. How many claimed USD and then total, combining the two. It tells you your size, so how many tokens you have staked, so to speak, versus the global size. So there's 582,000. And kind of keep in mind that based on the tokenomics here, there's a max supply of 757, and there's always going to be some liquidity pool, right? So this number kind of is capped. So you generally will lock in your percent of the total um, at any given time, right? So this will never go down once it gets to be the maxed kind of singularity size. Or another way to put it is if I took 331 and I divided it by the total amount of tokens, the 757, So it's 0.04% would be the lowest that it could kind of ever go for me. So that's how you kind of know how much it's going to be. Um, Shows you some dividends here from trading, and then the active singularities, which we'll look at next. Um, so you can ignore bonds and staking. That's not actually relevant anymore in this case. Um, if you want, you can kind of put money into the PancakeSwap liquidity pool. I would just do that directly in PancakeSwap over here and adding the liquidity if you want to kind of gain fees from that exchange. Um, but really, the main thing here in their platform, I think, is the singularity. So if you go over here, right now it's only a 30-day lockup, which will automatically unlock for you. You put the number of tokens you want to lock based on your balance. You approve it, and then you stake it, and then it'll show you in here um, how many you have, right? So this is my unstaked balance, and this is my staked balance. And then once I start getting rewards, they'll be showing up on the screen here. All of this stuff is detailed in their docs. So if we click on the docs project, you can see, where they're getting the revenue from, what the phase 2 versus phase 1 is all about, how to buy MES, the supply of tokenomics, their treasury. They are working on a page to show their treasury, kind of in the proof of reserve type concept, but that's still being worked on and it's not developed yet. They're in essence focusing on their mining operation first before they start updating the dApp a little bit more. Tells you how to stake into the singularity here, so that's kind of useful. Some common kind of questions, and then their social media. So definitely take a look at it, but it's a relatively simple project at this point. Like before it was complex, but now it's really just, I'll go back to the site here. Now it's really just, you go to PancakeSwap, you buy mass tokens, you either trade them and kind of play with the market games, or you stake them in a singularity, and that's it. It's really kind of that simple and that straightforward. Um, so that is the tokenomics and the dApp. All right, so let's take a look at the overall analysis. What are the risks? Oops, sorry about that. Okay, so what are the risks? Well, the token is traded on the market, right? So if for some reason everybody leaves, the token price could just dramatically drop. Now that doesn't mean that your percent ownership in the rewards will ever drop. But if you're looking at kind of the old, gamification of a token, the kind of trading gambling side of crypto, that's always a risk, right? If everybody sold their tokens, that's going to drop the price down dramatically because demand's going to go away, and so that's a problem. I think another risk is no buy and sell tax. That might not be necessarily a popular opinion, but if they're not continually getting a revenue stream from investors, that puts them a lot of onus on their investments to make money. Um, Maybe it is an overconfidence on their part, but that's something to kind of watch out for. And they can always change it if they wanted to, but that's where it stands today. What are the safeguards? Well, the team is effectively doxxed. I mean, if you look at we know the John's first name and last name. He had mentioned he had worked for Carvana as an architect. You can see him on LinkedIn. He has software engineering experience. You effectively know they've disclosed enough information that you know exactly who these people are. So it's going to be hard for them to run if there were any issues. And they also live in the United States, at least as of now. So they are, would be highly regulated if something happened, right? Um, they do have multiple projects, right? So they're dedicated to the community. I'm not including necessarily the failed projects, so to speak, but just the momentum is staying around and that Alpha Shares is still active. Tells me that they have some kind of stake in the game. And then finally, they have multiple revenue streams. So it's always good. I know a lot of people are doing trading bots, are doing Validator node, they're doing mining. So they're not doing anything crazy new, but they do have multiple streams in case one starts to fail. The biggest risk here is that if their 450,000 treasury investment dries up, that means, in essence, the project is going to collapse because they're not continuing to accept new taxes on the token. So that's my overall analysis. Quick credits, the UI, the design of these slides was made by Slides Go and Flat Icon and Free Picks, so definitely check them out. I want to give credit where credit is due. All right, so overall, the Momentum project is interesting. I do think the team has learned a lot from their kind of longevity of working on different projects. They seem very open and transparent on calls, and they seem to want to do right by the community. So it's definitely something to keep an eye on and look out for. So check it out. I'll put the links in the description, and if you have any questions, as always, put them in the comments, and I will be happy to respond.